Could this latest rally from the Australian dollar be nothing more than a correction that leads to the next push lower? Hi everyone, my name is Justin Bennett with Daily Price Action, and in today's video we're going to take a look at the Australian dollar versus the USD, and mainly we're going to look at how this latest rally may be in trouble and what it's going to take to extend the pair even lower. Alright, so let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week where I analyze currency pairs like the Euro USD, the Pound USD, the Dollar Yen, and many more. I'll show you the key levels I'm watching and how I'm approaching each currency pair. So you're going to get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So as you can see from this chart, the Australian dollar against the USD has been caught in a downtrend for quite some time. And recently, this downtrend right here is defined by a descending channel. So notice we have this high up here, this high, this one, and also this one. Now the lows are right here, and then we had several lows through this area. Notice how the Australian dollar did pierce this level, but it was on an intraday basis. Okay, the pair never did close below that channel support. And recently we also got a break of this channel, which I pointed out on the blog, followed by a retest of that level and then a rally up here to 70.15. This right here was a key level we had our eye on based on some weekly lows. I showed this on the weekly chart just a few weeks ago. So 70.15 was a key level, and I also said once we started to see the Australian dollar coming off of 70.15 right here on this candle, I posted on the blog and said that a pullback was likely at least down here to 69.30. But notice how aggressive this pullback has been. Even this pullback to 69.30 was incredibly aggressive, and you can see that just by the limited amount of space between this rally and the pullback. Okay, so you can see where the Australian dollar did pause at 69.30 on these two candles, but today's session is well off of that level. Okay, so right now, the aggressiveness of this pullback does indicate, at least to me, that we could see a retest of this 68.10/20 area. Now, this is a confluence of support based on this ascending channel that has defined the short-term uptrend, as well as this channel top that we just looked at. Okay, so this channel top, this ascending channel bottom, and 68.10 is also a key horizontal level based on this low right here, this low, this high, and these highs through this area. Okay, so what does all of this mean? Well, in my opinion, it means two things. One is that this short-term ascending channel and this short-term uptrend is technically still intact as long as this ascending channel bottom is intact. Okay, so this uptrend, even though this pullback has been aggressive, this uptrend is still intact. Now, that's the first thing. Okay, so you have to respect that, and that if we get a retest of this area, we could see a bounce, whether that be a minor bounce or even a more significant bounce all the way back to 69.30. We have to respect that as long as this ascending channel support is intact around 68.10/20. Now, again, this is a confluence of support. So what that means is that if we get a close, a daily close below 68.10, we could see the Australian dollar push lower, perhaps all the way down here into this 66.80 level based on several lows from 2019. So how you approach the Australian dollar is totally up to you. As for me, I would prefer to watch for a break below this confluence of support around 68.10/20, simply because of the aggressiveness of this pullback. To me, this does not look constructive to look for buying opportunities. Instead, I would prefer to take advantage of any weakness here following a close below this confluence of support. All right, so you could look to buy the currency pair down here, especially if we get some type of bullish price action for a pop higher. just keep in mind that this pullback right here is incredibly aggressive. And in my experience, a lot of times when you see a pullback this aggressive, it does not tend to stop even at a confluence of support like this. So again, we may get a pop higher, perhaps all the way back up here into 69.30, but that could simply be a selling opportunity for an eventual break below this channel support, which does, as I mentioned earlier, define this short-term uptrend. So to summarize, I'll be watching to see if we can get a close below this 68.10/20 confluence of support for a move down here into the 2019 lows around 66.80. Alternatively, if we do see the Australian dollar versus the USD come down here and then bounce higher, I'll go ahead and start watching for bearish price action, perhaps up here around 69.30. Okay, so I'll either look to sell on a daily close below this confluence of support or on bearish price action at key resistance like 69.30. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.